after the announcement of a 50 basis point rate hike and pretty much the withdrawal of accommodative stance by the RBI, as well as an increase in the expectation of inflation in the current financial year, you had the equity markets that bounced a little bit. But take a look at the benchmark index. It's up about 0.2% as we speak. The Nifty 50 is given up just a tad bit of the gains that it had managed to achieve. But as you're seeing on the screen, the one very bright spot is the Nifty Bank, which is gaining as much as 0.8%. We've got Kunal Bothra as well as Mr. G. Chokalingam joining in. And thank you so much, gentlemen, for taking the time. We're going to launch straight into queries. But before we do, Kunal, I want to come to you on a couple of these points, which is you had the benchmark recover quite sharply from the low point of the day. And you have Nifty Bank that looks particularly strong today. What are the technicals telling you about the near-term levels to watch for?
So yes, Alex, and I think Bank Nifty being more stronger, I think is a very good sign because the sector strength is coming back again. The leadership quality of the banking index is coming back again quite strongly. That's a very good positive for the markets, not just from an intraday perspective, but from the overall market internals as well. The levels for Bank Nifty, which I was particularly mapping up, was 35,000 as a support and 35,500 as a resistance. I think we managed to make a high of 450, 449 on the spot levels for Bank Nifty. So we're just trying to meander into this 400, 500 point range on the banking index. But I believe that an eventual breakout of the Bank Nifty, of this consolidation, would happen about 35,500 mark. That's the most important level which a short-term trader should be keeping an eye upon if he's looking to carry forward positions on the banking index. Within this 500 point, we can keep on trading in a volatile fashion, but there would not be any major trend which would emerge on the banking index. So that's the ideology on the Bank Nifty. For Nifty, similar levels, 16,350 as a support and 16,500 as the resistance.
All right, so those are the levels coming in for Nifty Bank, and that's where Kunal sees both of them going ahead. But let's get going with the queries. We've already have a couple of them that's already been there. So let's get going with that. I have the first query coming in from Naveen, and he's saying that he's holding IEX at the levels of 195 rupees per share. He wants to know whether he should continue to hold it or exit. So what's your take on this one, Kunal? Also, good morning, Kunal, as well as Mr. Chokalingam. But Kunal, this query is for you.
Good morning, Cheryl. So on IEX particularly, I believe after this last 1 month of very sharp, 1.5 month of very sharp correction from 245 or 46 levels, the stock is corrected towards 170, 175, which it tested a couple of days back. So the correction has been very sharp for the stock. But in this sharp correction phase, the indicators have started to get into a divergent mode. So the RSIs on the hourly charts, on the daily time frame, has started to show signs of divergence, which means that somehow at this 170, 175 mark, the fall could get arrested for the stock. Now, whether it consolidates or gets into a rally mode, that we'll come to know maybe over the next couple of weeks. But at least as of now, there should not be any major reason to panic. I would suggest a hold on IEX.
All right, Mr. Chokalingam. Sorry, apologies. Mr. Chokalingam, I'm coming to you on this next one. We've got a question coming in from Saroj Kumar Karmarkar, who's writing in from West Bengal, and he's asking about a recently listed counter, Rainbow Children's Medicare. If you have a view on this, it's a recently listed stock, but how does it look? And if you compare it with the Nifty peer, if you're talking about the hospital space, Apollo Hospitals has been drubbed quite a bit over the course of the last few months, right? So would you give a comment on the space and how you see it going?
I did. Not comfortable with the fundamentals. One can look at Apollo Hospital in the large cap space because it is part of Nifty and there is a support for Nifty stock from DIS. Or if he is a long-term investor, he can look at Poway Medical, that also corrected. That has got one of the cheapest enterprise value per bed, excellent balance sheet and a solid growth story.
Right, all right. Let's get going with the next one. This one is coming from Vivek, and Vivek wants to know whether it makes sense to buy Karur Vysya Bank at this level. What's your take? Kunal, do you think that's a good bet in the private banking space, Karur Vysya Bank?
So I think it's one of the few mid-cap names which has done quite, I would say, okay over the last 12 to 18 months. So at a time when many of these banking stocks have gone through a correction. The stock has remained more sideways. But then remember that for stocks to go up higher, you would need a lot of demand chasing the stock price. There is no major pattern which is shaping up for Karur Vysya Bank. So it may turn out to be a chart which can break out on the upside, but how long can the consolidation continue? That could be a big question mark. An alternative which I would probably suggest from the banking space and from the mid cap end, something would be like City Union Bank as well as Federal Bank. I think both these stocks are looking very strong on their respective charts, both on the short term as well as on the slightly longer term time frame. So if you can consider shifting your investments from Karur Vysya Bank towards these stocks, that could actually turn out to be a better bet from a medium to long term play as well.
Kunal, I'm coming back to you on this next one. We've got Prashant who's asking about Dalmia Bharat, and he's asking from levels of 2,175. The stock has fallen quite substantially. Is it worth a hold for the long term? I do not know whether he's entered into the stock, but would it be a fresh buy at this point? And what's the long term view?
So I think from a long-term play, of course, these stocks are very good buy because they tend to give you very consistent kind of returns on a longer term kind of a time scale. Now I look at the charts for Dalmia Bharat and such other cement names in the last 8-9 months, that how sharp these stocks have corrected. Now typically a 50% correction for cement stocks is considered to be a very good point where stocks bottom out, the stocks get into a demand zone, and then you see a gradual pickup of buying happening. So price wise, I think it's a very attractive level to look at buying these stocks from a longer term play. The only concern is with the short term charts, because over the last 1 week we've seen some very strong addition of short built up on many of these cement names. So possibly these stocks can go into a downward trend on the very short term time scale, but if you can adopt a buy and dips strategy starting from current levels, I think it could be a good play from a longer term play for the stocks like Dalmia Bharat.
Okay, this next one that I have is from Natarajan Ramesh, and he wants to know whether it's advisable to buy Coromandel International at current market price for a time horizon of about 2 years. I will take this query to you, Mr. Chokkalingam. What's your take on Coromandel International? Makes sense that for Natarajan to look at this particular counter right now, or should he wait for some more correction for the longer term?
Yeah. For a longer term, certainly he can consider, but I expect the market to correct for next 1-2 months, because of various global factors and the oil price. Therefore, what he can do, he can phase out buying slowly over next 2 months. Though I am negative on fertilizer sector as a whole, I think this has done outstandingly well because it has got captive sources of inputs to some extent, and then excellent management and extraordinary balance sheet. So therefore, definitely you can phase out and buy slowly over next 2 months for the long term.
Understood. All right. We've got another question coming your way, Mr. Chokkalingam. This is on Deepak Nitrate. And this is from Vikas. He's saying that he holds the counter at levels of 2,500. He's got 90 shares and he's lost a little ground. Looking at the charts right now, it's trading down about 4% at 1,800 or thereabouts. Should he hold on for the long term though?
And I won't advise him to add. He can hold on for long term. Whenever he gets the principal back or marginal profit, he can come out, because this kind of chemical prices are highly cyclical, market also cyclical, and all of us know it got some difficulty in the recent time. So therefore, he can hold and exit when he gets his cost price.
Sri Charan, and he wants to know about Hindalco. He's saying that the stock seems to be underperforming despite awesome results. So what should he do, Mr. Chokkalingam? Hindalco, yes, it is a commodity-driven stock. It is going to move as per commodity cycles as well, isn't it?
Unexpectedly, aluminum prices have suddenly crashed. And the way the global growth is being revised downward, that would be negative for metal space. So the down cycle may not be over. Otherwise, it's a great stock. But for being a little defensive, I would suggest him to consider Nalco, because there is a very good dividend yield, and that is proven to be giving some support on the bottom side whenever market falls like this. So therefore, I would prefer Nalco to Hindalco.
Gentlemen, we have to slip into a very quick break, but do stay with us. And viewers, we are going to take queries even after the break, so do stay tuned.
In every corner of India, there are unique.
With each passing day, this market is becoming better, and with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
ITC's credo is nation first, sab saath bade. I would like to live this philosophy in whatever business we do.
We continue to be very well diversified across product lines. The general health of the company continues to be very strong.
We are a publicly listed company. We have access to capital. We have great brands.
No, beautiful question. Yeah, I can tell you, we believe that we'll be able to reduce costs.
ET is one of my favorites in the world. I'm a fan.
This is a very insightful question that you're asking, Nikunj, and almost seems like you were listening in on the deliberation the committee was doing. And you're absolutely right.
And if this cup of coffee is costing you 25 rupees right now, after 5 years, it may cost you 100 rupees. Predicting the market or predicting the short-term move in the market, well, that's always very easy. Predicting it right and making money, it's not impossible. It could be a challenge.
Nikunj, you are a very seasoned market observer, and therefore you may hit the nail on the head.
I think you have always kept the focus on the retail investor, and I think it's again a very apt, very good question.
Nikunj, first of all, thank you so much. You are one person I've always enjoyed interacting throughout last 15-20 years.
You know, the problem on coming on your channel is that you already know everything. I just heard your introduction. And what can anybody add to that?
Stock markets is a numbers game, and it sometimes does come across as one-dimensional. But what people don't see is that these numbers, when strung together, tell a story. There's no really black or white. It very much seems to be a work in progress of triumphs and mistakes, greed and fear. And I bring you that story behind the numbers in action.
The personal finance show that helps you achieve all your financial dreams.
This show gets you everything that you need to know about your money, how to earn more, invest smartly, and spend while getting the best bang for your buck.
From the perfect home to early retirement and everything in between.
Real estate, everyone knows, is an asset that Indians absolutely love, maybe even more than gold.
Join us every weekday at 5 p.m. on the ET Money Show. Investment made easy, only on ET Now.
With each passing day, this market is becoming better, and with each passing day, this market is only telling you that if you've participated on every decline, you've actually made money.
ITC's credo is nation first, sab saath bade. I would like to live this philosophy in whatever business we do.
We continue to be very well diversified across product lines. The general health of the company continues to be very strong.
We are a publicly listed company. We have access to capital. We have great brands.
Welcome back. You're watching Buy Now, Sell Now, and we are in the midst of the query segment. Mr. Chokkalingam as well as Kunal Bothra are answering all of your questions. The next question comes in from Captain Ramrao Randeve from Pune, and it must be said that the captain has acquired stocks at very attractive prices. This one is Trident that we're speaking about. He's got 12,500 shares, which he acquired at levels of 9.25. He sold 1,500 at 60 rupees per share. The question is for you, Mr. Chokkalingam. Should he hold the rest or should he continue to liquidate his position?
I would suggest good profit now because we know the input prices have gone up substantially for the whole sector. And therefore, I am saying next 2 quarters, there will be a lot of stress on its earnings. So therefore, he can book profit and hold on to the cash.
You, Mr. Chokkalingam, and this one is coming from Joy Manoj Kumar, and he has 100 shares of HDFC, which he's holding for the longer term. He's saying he also has 25 shares of HDFC Limited. Now he wants to know whether should he look to switch from HDFC Limited to Nestle. Do you think this strategy makes sense for a long-term investor?
Long-term, I would not suggest because the HDFC Bank has corrected a lot more, than Nestle. And secondly, the banking credit industry has turned around. It's very surprising that now it is growing in double digit, which came to as low as 5% during pandemic time. So therefore, and also HDFC Bank is certain to make around a 15 to 18% growth for next 3-5 years consistently. So that kind of confidence is not there for FMCG companies because of input inflation. So therefore, I would suggest consolidate only HDFC Bank instead of Nestle.
All right. This next one's for you, Kunal, and LIC Housing Finance is the name of the counter. Shankar from Chennai is asking about this. He's bought a call option with a strike of 360 at 14, and I'm assuming that this is for the June expiry. He hasn't mentioned. What's the view?
So I think he can continue to hold on. My sense is I think probably very, very recently this call option because the stock is in the last 2 days started to slide significantly. From I think 380 levels, the stock is now corrected back towards 350 odd mark. The only reason for me suggesting a hold is because the indicators are now extremely oversold. RSI has come back towards levels of 20, 21 on the hourly time frame chart. So that could probably result into some sort of a bounce shaping up into LIC Housing probably over the next couple of days. Since it's a June expiry and looking at it from a short-term play, I would suggest a hold.
All right, this one is coming in from Kaji and he is asking whether it's good idea to enter DVs right now. He's saying that he sold it at the levels of 4,400 rupees per share. What's your take on this one, Kunal? We saw what happened to DVs after the earnings, but for someone who's already sold it at a level of 4,400, makes sense to enter right now?
So I think what you can do is you can look to buy it in phases. Of course, you can't miss out on the opportunity that the stock has corrected from those levels of 4,400 to 3,500 currently. But the only concern with stocks like Divi Slab is because, in the last, I think 5-6 years, there was such a phase where Divi Slab had corrected from 1,100 to 800. And then subsequently over the next 3 to 6 months, the stock had fallen another 300 points. Now, if we try and map a very similar kind of a scenario from current levels, we can expect Divi Slab to correct to maybe 3,200, 3,000 levels as well over the next 3 to 6 months. So keeping that as a possibility, it makes good sense to buy on dips since you've already sold at high levels.
Okay. Let's talk about Vadilal Industries. We've got a question coming in from Akash, and he's asking whether it's the right time to acquire this. Kunal, this one's for you.
Well, maybe not right time to acquire this, but I think you can look to buy the stock on decent correction mode. So, the last, I think 1.5 to 2 years have been fantastic for the stock price. I remember, I think, tracking the stock when it was, I think, at 700, sometime a couple of years back. And from there, the stock has just gone through a different trajectory altogether. But even on the short-term to medium-term time scale, it has this tendency of coming back towards its 50-day moving average. The recent test was just about, I think, end of the previous month of May, where the stock had come back towards 1650, 1700 mark, where it retested its 50-day moving average, and from there the rally resumed. So if you can try and take opportunity of such a kind of a correction, that could actually turn out to be a better bet rather than buying on momentum.
Okay, this one is coming from Jairaj Shetty, and he wants to know Ineos Styrolution. I always find that particular stock name like a tongue twister. He wants to know whether he can buy that one at current market price. What's your take on this one, Kunal?
So it's not a stock, frankly, I do track quite closely, but then looking at the charts as well, on the weekly and the monthly time frame, the the stock is getting into a very, very interesting aspect. Now on the weekly and the monthly charts, there are signs of a bullish RSI divergence setting up for the stock. Now it's a bit too early to call in because the RSI divergence is not completed as such, but possibly over the next 1 to 2 months, if the stock doesn't fall, say below the 700, 720 mark, and on the other hand, if it manages to cross 850 or 880 mark, then we can expect that this divergence gets completed. And once that happens, we can call in for a very strong recovery on a multi-quarter basis. So I would suggest a wait and watch. Possibly over the next 1 or 2 months, if the stock breaks past about 850 plus, then you can look to buy.
All right. I was practicing saying in your style illusion because Cheryl seemed to be having a little trouble with it. Mr. Chockalingam, I'm coming to you next on this question. LIC, I think a couple of people are asking about this counter, and it's, of course, recently listed, lost a lot of ground since the IPO. If you've gotten allotment in the IPO, should you hold on? Should you average your price right now? If you haven't gotten allotment, is this a good level to start entering?
Oh, if you got trapped in it, then better you hold it because there is a possibility of compensating the investor through good dividend. I would not suggest averaging it down by accumulating more, at least for next 1-2 months. I have been a little negative about the whole market. I won't be surprised the whole market falls another 3 to 5% also from current level. So therefore, I would not suggest the fresh entry into PSU stock or averaging it down at least for next 1 to 2 months.
All right, this one is coming from Amy, and this one is for you, Kunal. I believe she's talking about Nifty Bank. She's saying she's bought 34,800 call at 350 currently for current weekly expiry, given the PCR was low. But she wants to know whether she should book profits or more short covering is possible.
Tough one, frankly, because I would believe that the prospects for today's US Open, US market closing would probably determine the trends going forward. But then when I look at the charts and the strength of the Bank Nifty, I think you've bought at a good price because now I think you're sitting in the money with the strike price as well. Your break-even price is around 35,100 approximately, and the stock is or the banking index is now at 35,300 on the spot levels, which means you're already in the money and sitting into good profits. I would suggest to ride out the trend for tomorrow, and possibly if the Bank Nifty doesn't go below 35,100, keep that as a trailing stop loss. So 35,100 becomes a floor for you, and the more the index keeps on moving up higher, you can trail the stop loss by 50 points to 100 points depending on your comfort.
All right, this next one's a question coming in from Dhruv. He's asking about CDSL, Mr. Chockalingam, and he's got at levels of 1,239, which implies that he's lost a little ground. But he's asking whether he can hold for the long term.
Hold, because the investor base has got doubled from 5 crore to 10 crore in about 2.5 years. And next 5 years, I am expecting this to double again from 10 to 20 crore. And CDSL will be one of the biggest beneficiaries of this emerging trend. So therefore, you can hold it for long term. You can even average it down as it keeps falling over the next 1-2 months.
Okay. Well, on that note, we have to thank both you, Mr. Chockalingam, and Kunal, because we're almost completely out of time. But thank you so much for taking the time and for answering all the questions that you did answer today. All right, we have to slip into a short break, but there's more on the other side, so do stay tuned.
No, beautiful question. Yeah, I can tell you, we believe that